Good morning, good afternoon, good day. Welcome to my live market meeting, Wednesday, 14th July 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They run on the underlying TradeStation and Metastock platforms. That was the last slide of the presentation. Now I'll continue with the live system. As usual, starting with a look at the global markets, starting with Australian index AXJO. In the weekly chart, backdrop color is now bearish for 4 weeks. It's not moving anywhere. Daily also shows it is moving inside a range. We'll avoid taking any swing trade until the direction is clear, which will be after it can break out of the sideways range. Topics: Japanese market. Topix is also moving sideways. Weekly is bound by resistance trend line, support trend line. Daily has resistance trend line, watermark support. It is at the upper edge of the sideways range. If anything, we may look for a shorting opportunity if price tilts down from the daily trend line resistance and also the weekly trend line resistance. Next, China CSI 300 index. This is also moving sideways inside a triangle in weekly and inside a triangle in daily. UK market FTSE index, again moving sideways inside a triangle in daily, inside a narrow range in weekly. In fact, for the past two webinars, this is the third webinar that I'm showing that the global markets are moving sideways. Is that true for India's Nifty 50? Yes. In the daily, it is inside a triangle. Weekly is moving inside a very narrow range. For 3 webinars, about 2 weeks now, the global markets are moving sideways. They are neither going up nor coming down. What is the case for the USA market? Is it moving sideways? Let's look at the market ETFs. It is more in an uptrend. S&P 500 ETF SPY has trend line support in weekly daily, no trend line resistance. At the same time, it is above upper boundary, so we are not going to buy now. Yesterday, SPY made an intraday all-time high before coming down and turning negative. It also displayed the bearish headwind signal. Looking at that, I would be cautious. However, there is trend line support nearby, so I am not going to short SPY. I'll just be cautious and protect profit in existing long positions. Nasdaq ETF QQQ. In an uptrend in weekly, daily both, daily has many trend line supports. There was a bearish headwind a few days ago. Since then, we have a bear release and two indecision at the top. Again, reason to be cautious. However, we are not going to take any short trade because there is trend line support nearby. If I change to TradeStation Q Elite, let's look at the alternate daily signals also. For QQQ, nothing to read at the right edge in the alternate daily chart. If I go back to SPY, we have the same bearish headwind that we saw on Q Global. In weekly, we have an indecision at the top, but why I came here is to show this red candle high. Red candle high came in SPY, tried to make a new all-time high and came down. I was talking to one of the experienced HSI traders, I think a couple of weeks earlier. I had already released the alternate daily signals based on HSI like indicators at that time. Somehow we came to discuss the red candle high, green candle low, and what he mentioned, I remember, is that when you see a large number of red candle high at market top or the industry sector top, or a large number of green candle low market top or industry sector top, then we may look for booking profit and look for shorting opportunities. The bearish headwind serves the same purpose. Now, how to know how many red candle highs are there? I'll come back to that after I go through the market analysis. Let's look at DIA. This also displayed a bearish headwind at the watermark resistance in daily. Weekly already had a bearish headwind at that point. Looking at that, I am not going to buy DIA now. If anything, I may look for shorting using intraday charts. And Russell 2000 IWM. Remember in live session, right on this day, I mentioned I was not going to buy IWM or DIA because they were relatively weaker. DIA came down little bit and then recovered, but IWM could not recover. Now it has lower low, lower high. We have a bearish color, flow color in daily. The weekly is also having bearish color, backdrop color. That is confirming all the requirements of a go with flow trend following short setup. There is a trend line support, but that is far away relative to the risk in the trade. The stop would be just above the recent high. So this will be the risk distance and the potential reward is this much. We are having more than one reward risk ratio. One may consider taking a short trade in IWM using the go with flow short setup. Now I don't prefer to use ETF so much. Instead of trading IWM, you might look for fundamentally weak small cap stocks and look for short setup there. If we look at the alternate signals, we have Bongo, the candle color here in the alternate chart. Bongo is red, and we have a dot here that is the bearish Kahuna, which is also shown here, and a Mobo breakout or breakdown, you may say, bearish. PSAR is already red, so we are having bearish signals on the alternate chart also. The trade setups are read from the Q charts, and that is giving a confirmed go with flow short setup. Also relative performance is very weak. We see that SPY QQQ in confirmed uptrend. Dia kind of moved sideways and stopped at the previous all-time high. And for short-term trading purposes, IWM is trending lower now. That's a mixed picture. There may be shorting opportunities in the market. I will be cautious about buying at the market top. Especially there is some sign of weakness like the red candle high in SPY, bearish headwind in several market ETFs, and IWM is already in downtrend. The market ETFs are starting to show weakness just now, but QH showed the weakness long time ago. I am discussing this 1 month to 1 day sector, industry, stock advance decline, breadth insight for many weeks now. In the last webinar, the 1 day and 2 day periods were green, and I mentioned that if the previous flip-flop was to continue, then it may turn red, and that happened. Now it is red. I also mentioned that while 1 day, 2 day graphs are flip-flopping between green and red, the red colors are propagating to higher intervals. That is coming more and more true. As of yesterday's market close, all the periods are bearish. Notably, 1 month is bearish, highly bearish, and 1 day also is also highly bearish. This Q edge analysis is showing weakness for quite a long time that is only now becoming apparent in market ETFs. Using Q systems, Q traders are able to have a more complete view of market in this way, not just rely on IBD style accumulation distribution days, which is based on major ETFs or indices and based on just whether we have a high volume day or not. That is useful, but I think that is not totally effective in understanding the market weakness before it shows up in the indices or ETFs. Using the Q edge and other Q market breadth insight, I could anticipate the market weakness that is apparent now. But SPY made an intraday all-time high yesterday also. That is the value of this market level. That is the value of this market level analysis. Let's now look at the bucket. The pie chart 1 day to 1 month advanced decline breadth sector industry stock looks bearish. But if I look at the bucket analysis, it has turned bearish relative to yesterday. For example, if you see the percentage of stocks in S&P 1500 below their mid Bollinger Bands, that came down by 19% yesterday in a single day. And a few days earlier, it jumped up by 20% or around 20%. That was a jump up of 20% in 1 day, and yesterday we had a jump down of 19%. That is showing the volatility of the market. Overall, the red bars are more bearish than bullish. That is also showing overall, using bucket analysis, stocks are weak. Weak, but not at the extreme weakness level. The percentage of stocks below lower Bollinger Band is just 4.7%. Once it hits 30-40% or so, then we may expect a pullback up, retracement up, but it is far from that. Weak but not oversold from this angle. What about technical breadth? The weekly balance of bulls and bears, that is clearly bearish now. Whether we look at all signals, trend continuation or reversal signals. Strength signals are bullish. However, as I mentioned earlier, when you combine bullish strength with bearish reversal, overall that becomes bearish. The number of bearish headwinds is now increasing, not at an alert level yet. In fact, yes, it's about 2 point something percentage of the stocks. When it hits 2%, 3% or more, then it is an alert level. So bearish headwinds is telling us to be cautious from this angle also. If I look at yesterday's market technical breadth, that is even more bearish across all categories. Now all categories are bearish, almost 90% for all the categories, all signals, strength, continuation, reversal. And you saw the overbought condition here, percentage of stocks giving bullish signals at price extreme high was above 50%. That was overbought condition from technical breadth. That overbought condition has given away. Now it is not overbought. You can see from the bar chart here how many bearish signals came relative to the bullish signals. Yesterday was a bearish day from technical signals point of view as well. Now let's look at market breadth using Q Global Market Breadth Analysis. Let's look at the composite indices first. Market breadth, Nasdaq and market breadth NYSE, exchange level market breadth. The yellow line, that is percentage of stocks above 50 MA, was already starting to come down, though QQQ was going up. The yellow line for NYSE was already going down, though SPY was going up. This bearish divergence also showed the weakness that is not visible from market ETFs or not visible from IBD style accumulation distribution days. There was an accumulation day here, and it was also an Eureka day. Eureka is the concept that is there in HGSI. I set it up in this system also. You see, NYSE had an Eureka on this day, and that was reflected in the market breadth total view also. Market breadth total view, we saw the Eureka on this day, Friday. We also saw heavy accumulation count of 5. And if you watched my weekend roundup, I clearly mentioned that Eureka at the market top and 5 accumulation count at the market top may be a sign of exhaustion. We don't know if it is a sign of exhaustion yet, but that was reason to be cautious, and that is still reason to be cautious. We still don't have a heavy distribution count at the right edge. If we have a distribution count of 3, 4, 5 now, then we will understand heavy selling has started. That will be even more reason to be cautious and maybe even reason to look for short trades. There is no sign of heavy selling yet. There is no distribution count at the right edge, and there is also no Hindenburg or Phoenix or market level bingo. The percentage of stocks above 50 MA, when we see in aggregate, that is for the two composites Nasdaq NYSE, for major indices S&P 1500, 500, Nasdaq 100, Dow Jones Industrials, the percentage of stocks above 50 MA is coming down for a long time. This was also a breadth inside that was showing us the weakness. That weakness is continuing. Yesterday tilted down. It is just above the 50% level. Reason to be cautious, but there are not many bearish signals yet. Now let's look at a way to find the number of red candle high. In Q Finder, if we go to the alternate signals and failed at extreme, that is the green candle low and red candle high signal failed at extreme. If you see the pair of numbers, you know yesterday there were only 4 green candle low and 75 green candle high. I ran it on a watch list of stocks that has 2500 stocks, so it's about 3%. For bearish headwind, weekly bearish headwind, I have seen when the number of, or rather percentage of bearish headwinds come to 2 to 3% or more, that sign to be cautious. Maybe we may apply a similar thumb rule that when the red candle high becomes 2 to 3% or more, that's time to be cautious. If we accept that thumb rule, then yesterday we had 3% of stocks displaying red candle high. That's reason to be cautious. I am using these alternate signals recently. I have not used them extensively. Let's look at some of the stocks with red candle high. We'll do that, but before I do that, let me look at some of the stocks that I discussed earlier. LPX. And there is a reason I came here. Let's look at LPX using daily chart. Let's have a full screen view of LPX using a simplified chart, Q chart. When this bearish headwind came, at that time there was a trend line support. And looking at the bearish headwind, and at that time it was at all-time high. I mentioned that the time to be cautious would be when this trend line support was broken. LPX was in forest industry and it was rip-roaring higher, but I could use the bearish headwind to be cautious right at the very top, and the shorting opportunity came using intraday chart right at this point when price broke down below the trendline support. That was an intraday signal, and if you continue to follow LPX on this day using the unambiguous checklists, it gave a go with flow trend following short setup, which hit the profit target in a couple of days. Profit target for go with flow setup would be the boundary level, lower boundary for short trade that was hit in a number of days. Since then it was moving up down sideways. Yesterday it came down again, stopped right at the trend line support. One thing you may notice that the last down day was a large bearish flow candle. Then it went up for 4 days but with candles of much smaller size. Then dropped again with a much bigger candle size, stopped right at the trend line support. If it can break down below the trend line support, that may give a shorting opportunity, breakout shorting opportunity. Now I could use the bearish headwind signal at the top to be alert. And now let me switch to the alternate daily signals. Right after bearish headwind, we had this candle, and that gave a red candle high. So we had a bearish headwind in Q chart on this day, and the red candle high came 1 to 3 days later, and after another 2 days on this candle, the trend line support was broken. So if you keep on reading the charts of your interest day by day, one day at a time, you will start to see the bearish signals piling up. You would protect profit in your long position, and you may even take short trades. I like to take shorts at the very top using naked put options because they become highly profitable due to volatility increase even if the price drops by a relatively modest percentage. LPX could be shorted right at or near the top. Now, why did I show LPX? Let's look at Amazon. Using the simplified Q chart, Amazon made a new all-time high on an intraday basis yesterday. However, it had a bearish headwind one day ago itself. Price tried to go above the high of that bearish headwind candle and reversed. At the end of the day, it has a bearish release also. And if I switch to alternate daily chart, it has a red candle high yesterday. The signals that we saw in LPX at the very high before it dropped significantly, we are seeing similar signals in Amazon as of yesterday. Now, if you kept an eye on Amazon yesterday, and why would you keep an eye on Amazon? Firstly, it's one of the mega caps. I keep an eye, and many of you may also keep an eye on the FANG stocks. My trace station got disconnected. Let me see if it can connect back. Yeah, it's connecting back. But I don't have to wait for that. I may open the intraday fine-tune chart on Q Global. It's always good to have two systems, one as a backup of the other. Okay, I may have some issues with Metastock Trade Station both. Sorry about that. I'm having some internet issues. Let me try to connect to Metastock again. Okay, I'll come back to it. The internet is having issues. I hope you can hear me. Let's come back to it while the chart is loading. Okay, it has come. Okay, let's spend some time on that. Let's look at Amazon again. It had an indecision at the top Friday. Monday it had a bearish headwind. Yesterday Tuesday it tried to go up, came down, gave another indecision at the top. So we have a cluster of indecision at the top now too. We also have reversal at price extreme or pendulum high. We have a bear release signal, and we have red candle high. Enough bearish signals. Now if you kept on following Amazon, one reason because Amazon is one of the mega cap stocks, another reason would be because it displayed a bearish headwind at the top one day earlier. That would be also a reason to keep an eye. One could in fact short Amazon yesterday Right when it tried to go above previous day's high, displayed a series of bearish signals, and then the traffic light candle color turned red and price came below the pivot line. So let's read this intraday chart, Q chart, bar by bar. And let's read it using 5-minute interval and see how precisely one could short Amazon. Amazon is an expensive stock, but the technique may be applied to other stocks, or one might trade options on Amazon, which are also expensive. Let's read the chart. We had a bearish headwind at the close of the previous day. So we are watching Amazon, and initially Amazon created the early range high, early range low. If it broke below early range low, we could try to take a shot using early range breakout technique. But it didn't break below early range low immediately. Instead, it went up. Then we are going to use the shorting technique using a bear release signal that would show that bullish momentum is slowing down, bearish momentum is starting to go up. We would like to have heavy volume at or prior to the bearish release, and we would like price to come down below a major pivot. So I was watching Amazon, then I saw one indecision at the top, another indecision at the top, one bear release. However, there was no pivot line nearby, so I waited. Then price went up further, went above previous day's high, the green pivot level. Then I had the bear release signal. There was heavy activity preceding that, so I was starting to be ready to take a short trade, but I would wait for price to come back below the major pivot, the green pivot. Tried to go below that pivot on this candle, but indecisive shape. Tried again indecisive shape. Tried again indecisive shape. Again lower tail is indecision. Tried again, in fact on this candle it closed below the pivot but long lower tail, and also it had an indecision at the bottom. That's not a bearish signal. Indecision candle, not a bearish signal. So I waited. Then on this candle, it looked like that it closed decisively with a bearish shape candle. That was the first candle from the top that was fully bearish in color and shape, and that closed below the major pivot, green pivot line. So that would be the low risk entry opportunity in Amazon short trade. If someone is very aggressive, he or she could put stop just above the recent high using 5-minute chart, but I don't like that. I would like to give stop, initial stop above day's high, and that stop was not hit. So in fact, I shorted Amazon somewhere in this area, and I like to use naked puts or naked options in general only at the market top, and I use naked puts, very expensive options, and it came down. I bought 3750 put, I think expiring in August, and I have probably 15 to 20% profit by the close of the day. It's very expensive stock. Options are also expensive, but I could use the precise entry mechanism and patiently waited to short right at the very top. And if you see my risk distance, this was my risk distance. And my reward as of closing yesterday is much higher, maybe 1 is to 4. That is the usefulness of this precise entry technique. It can be used for precision entry of swing trading or day trading. Now, was there a swing trade setup? No. There was no Q short setup yesterday. However, using the many bearish signals, that came yesterday or even earlier, especially the bearish headwind one day earlier, I could decide to short Amazon. Now, another thing helped me to decide to short Amazon, that was keeping an eye on the FANG stocks. Facebook, Apple, Amazon, Netflix, Google, Tesla in this case. And if you notice the charts, and I always say the weakness for shorting is decided based on how these stocks are moving in 5 minutes in the morning session or 10 minutes in the afternoon session time frame around the intraday pivots to decide which one is weak. And if you kept an eye on this, you would notice that right at this point, Amazon was looking the weakest. And it came down back below the pivot level. And I had the bearish headwind in daily that also gave me more confidence to short Amazon. So I have a short position in Amazon, but it's very expensive stock. I don't usually trade Amazon. Now you see the similarity between LPX and Amazon. Different industries, but similar technical signals. For LPX, it worked well. I think that was about a month ago or so, and now Amazon had the same signals. I took a small risk and that paid off. Now all trades that I take don't work out. So BNGO. I bought this stock, but it was not a Q360 degrees trade. And I explained it in the earlier webinar. I traded it based on news. That's certainly not Q technique. The news was that they published back-to-back positive analysis, not drug approval or anything, positive back-to-back, some journal showing that their genomic technology is superior to others. Now it was in the downtrend. The stock was in a downtrend. It is a very low price stocks, $5-6. I found it only because I ran peer analysis using QVital on one of the healthcare stocks that I was holding. Anyway, I could take a long position using intraday charts. When it went up, it had a good profit, and last 2 days and especially yesterday it came down. Now if you look at the daily weekly and apply the go with flow short setup unambiguous checklist, it is actually giving a go with flow short setup. So I have an exit rule that if I have a long trade, swing trade, short term trade, and the stock displayed a valid Q setup in the opposite direction, short direction in this case, then I should exit. So I exited BNGO. I exited it yesterday using intraday chart, and in fact I have taken a short position in BNGO. These small price stocks can go up heavily, can come down heavily. I took a small loss in the long position that I traded. That was a news based trade, not a Q setup. And I have a short position now. The short position is in a profit. If it comes to this candle's low, then my small loss will be covered. And I don't want to take a short position also in these low price stocks. Genomic stocks, they may suddenly go up on news again. So I will try to exit it maybe at the lower boundary, which is close to this long candle's low. That was Bingo, Boingo, Boingo, Bionano, sorry, BNGO, Bionano. Few other stocks long side that I traded in last couple of days, they also didn't work and I exited them. Let me explain those trades. Bain was one of them, very strong fundamental stock. Why did I buy it? I bought it based on the support it found 1 week ago. I explained in the weekend market roundup. It found support in the weekly trend line. It had a reversal at the watermark support in daily. It had two bullish headwind in a row in couple of days. And on this day, let me try to make it a little bit bigger. On this day, that is on Friday, I discussed it I discussed it during the weekend, but Friday gave a valid long setup, headwind reversal long setup. Monday tried to go up but closed below the yellow line, and yesterday it was dropping sharply. My reason for buying the stock was this bounce or support at the trend line support in weekly. The weekly support was breaking and it was breaking fast. Using real-time chart, I could see that. So I exited the trade with a small loss. I didn't wait. That turned out to be useful because it pierced below the watermark low. Another financial stock, again I bought it using the trend line support in weekly on Friday. That also showed a headwind bullish signal. That was a bullish headwind reversal setup. Monday it went up nicely, but Tuesday it reversed sharply. The flow color did not turn magenta, but I think if it goes down a little bit, it will turn magenta, and the weekly magenta, daily magenta will confirm a go with flow trend following short setup. It came down very sharply yesterday on intraday chart, so I took a small loss in this stock also and came out. And I was keeping an eye, of course, on Q edge. The market breadth was weak from the beginning, and I didn't want to hold many long positions at the market top. So I exited this also. On the other hand, I discussed gold, the gold ETF, in a forum post right on this day. Right on this day. Using again the same weekly trend line support right on this day, and suggested a bullish idea that has gone up since then. I took a long position in Newmont. I didn't take a long in gold. I took in Newmont. Newmont has also gone up. I traded it using synthetic long. So short the put, long the call without any protective put below. This also has made a profit because the put options volatility reduced. Right on this day, I took a synthetic long position. It is not going up much, moving sideways. I could catch it right at this trend line support in weekly. Yesterday's candle shape is not very bullish friendly. If it starts to go down again today, I will make sure I exit the trade with a profit. I will not let it turn into a losing trend. I see in the overnight market it is up by 1.6%. That's good. Then the long position that I analyzed right on this day may be held. And because it was using a synthetic trade, the longer it goes sideways, it's good for the trader. We are not in a hurry to exit the trade. If we bought call options, then every passing day we would lose some money, but this was using synthetic, so there is no time decay. If anything, the drop in volatility is going to help us. So there is no reason to exit the trade if price continues to go up. Newmont was and is one of the strongest gold mining stocks. Those are the few trades I discussed and took. Some of the long trades exited with a small loss, and some of the long trades, Newmont for example, I'm holding, and I am taking some short trades also, like Amazon. Now let's have a look, go back to Q Finder. Let's look at some of the stocks, some of the 75 stocks that gave red candle high. I haven't used this much actually. Market was not at top, market was not displaying so many red candle high. Let's see if they are really red candle high. Let's look at the stocks, this group first. I'm opening only a few at a time. I will look at the alternate chart only if I see something that is tradable. Alternate chart, alternate daily entry chart has the red candle high. However, there is a trend line support here in this stock XYL, Xylem. Not going to consider shorting. And if you are holding long position in a stock like this, no need to worry too much in my view, because there are many trend line supports. If this support or even this support is broken, then depending on where you took the long position, then you may be cautious. If you took the long position here at the swing low, when it recovered above the yellow direction line, displayed a bull release signal, traffic light candle color flipped from red to green. If you took the long trade right at this point, your risk distance would be covered by the time price came here. You could book partial profit, and now you may move your stop below this trend line support, the closest one. On the other hand, if your entry price is much lower, maybe here using this long bullish flow candle, then you may wait for price to grow below the last trend line support here. In any case, no short trade here. Let's look at the next stock, RPD. This is also red candle high. I can see that because it tried to make a new high but pulled back. It also has a bearish headwind. So there is extra reason to be cautious, just like it was there in LPX 1 month or so ago, just like it was there in Amazon yesterday. RPD has reason to be cautious, but again there is a trend line support. I am not going to short now. PINC, this also has a trend line support. So I am not going to consider shorting it. It's inside a triangle pattern. This one. Okay, Paychex. I'll come back to Paychex. PAYX. Next is OSUR. OSUR. It has a bearish headwind. I think red candle high, but trend line support is there. Not going to short. BR has a trend line support nearby. Not going to short. Let's look at Paychex. PAYX. There is no Q short setup. These are alternate signals to be alert. There is no trade setup, but let's look at it first using the weekly daily at a glance. Now, once we have the weekly daily open, we can apply the unambiguous checklists in mind, and there is no Q trade setup. There is no bearish headwind. There is no bear release, so headwind reversal trade not possible. Box short setup not possible. In an uptrend, so go with flow short is certainly not possible. No pullback, no breakout. So there is no Q short trade setup. Now if I change to the alternate chart, yes, it has in fact two red candle high in a row. There was another red candle high a few days ago. However, since then price has gone up. Now we have two doji-like candles, one after another. This kind of stock I may not mind tracking using intraday fine-tune chart. You see the last 2 days the intraday range is very narrow. So if I take a short trade using fine-tune chart, I expect my stop loss to be also narrow. And if the daily candles were so narrow, if I am shorting using 5-minute interval or 10-minute interval, my stop will be extremely narrow. I wouldn't feel anything probably even if I get stopped out several times in such trades. So there is no swing short trade setup, but one may track it to take a possible short trade using fine-tune chart. But before doing that, let's check its fundamentals and industry. The aim of these webinars is more to explain the technique, not necessarily to get the best trade. Let's look at QVital scorecard for Paychex. medium valuation, some earnings growth, but not very high earnings growth. In terms of scorecard, it is in the middle, so we are allowed to short, not too bullish that we cannot short. Yesterday in itself, 68% of the PR stocks, industry peers, went down. In itself, the industry was down. In fact, yesterday almost all industries were down. But let's look at relative score also. Relative score, in fact, went up. It went down yesterday, but with a very small percentage, only 0.1% down yesterday. And relative score went up. Let's look at the rotation scorecard. This is looking too strong to short. So I will avoid taking a swing short trade in an industry that is relatively so strong. Day traders may try to take a day trade using fine-tuned chart. For swing trading, I don't like to short weak industries. I may ignore the fundamental if the stock is at a very high price level. That's the only time I ignore fundamentals. I may short strong fundamental stock. In any case, these stocks fundamentals are medium, not strong. But the one dimension I don't like to ignore is the industry. Another dimension I never ignore is the technical. Technically, I may have a shorting opportunity using fine-tune chart, but industry is not allowing that. Let's go back. Let's look at some more red candle high. I have 5 or so minutes. Let's look at another group of stocks. Close all metastock charts. Okay, let me open them using TradeStation. So I have the full at a glance in one shot. AMRC, the first stock. This is a better shorting opportunity in terms of weekly, daily. Why? Firstly, we have a red candle high. That's what I searched for in QFinder. Now here weekly has a cluster of indecision at the top. I explained cluster of indecision at the top or bottom in one of the recent webinars. When you see that at a high price level, you may protect profit in long positions and get ready for shorting. Then in daily, we have cluster of bearish headwinds. And again, an indecision at the top yesterday tried to go above the watermark resistance, reversed. That is a false upside breakout, and that created the red candle high as well. It's inside a squeeze. You may see that both from Q squeeze as well as alternate squeeze. Let's look at its fundamentals. AMRC. Fundamentally, valuation wise, it is very weak, overvalued, has some earnings growth, but we are allowed to short because it is overvalued. If we see the industry rotation, this is looking weaker, not as strong as was Paychex industry. And we have deceleration shown by pace column. So the industry allows us to short, fundamentals allows us to short, and technically there is no Q swing short setup, but looking at the bearish signals, what I do or you may do in such cases is to switch to intraday time frame, fine tune chart in the morning 5-minute session and see using the technique that I described while explaining Amazon, using those techniques, either early range breakout or release signal at pivot reversal, you may look for a short trade in a stock like this AMRC. the risk will be very narrow, so it will work out all right over a number of trades. Let's look at, I have 5 more minutes. Let's look at some more of the red candle high. BMI, red candle high. However, there is a trend line support. Incidentally, it has a bearish headwind also, bear release also, reversal candle also. So even if there is a trend line support, you may be cautious if you are holding a long position in a stock like that. Because we have bearish headwind, bear release, bearish reversal and red candle high. Many bearish signals in a single candle, and of course the traffic light flipped from green to red and a bearish shape candle, solid candle. I will not short it, but I will be careful if I had a long position. Next, EQIX. It reversed at watermark resistance, created a false upside breakout, bear release here, indecision at the top, red candle high, cluster of red candle high. However, there is a trend line support. I'll not short it. I'll be cautious if I had a long position. MSCI, this has no support nearby, and we have two red candle high in a row. In addition, yesterday we have an indecision at the top, which is at pendulum high, not only in daily but also weekly, and it's also in a Q squeeze. MSCI. Here I have a very low risk shorting opportunity using fine-tuned chart. Using daily weekly, there is no shorting opportunity. We found one for AMRC, very low risk shorting opportunity. Let's see MSCI allows us that or not. Let's check the fundamental and industry. MSCI. Stock not found. I typed the code wrongly. MSCI. No, it may not be a stock, maybe an ETF. Could it be? Let's check it out. Oh, give me 1 minute. I'm using the other monitor to check out the exact code. Yes, msci.k. .k. Okay, let's try once more. Similar to the previous stock. Overvalued, has some earnings growth, but the overvaluation allows us to short. Now let's check out its industry rotation. This is too strong an industry to try to short, so I will not try that. So we found AMRC so far. I have two more stocks. Let's go through them quickly. PHR has a red candle high. However, the daily is going straight up. There are not so many reversal signals or watermark resistance levels at the top. I'm going to ignore that. TTEK, the last one that we look at. It has a reversal, red candle high, but trendline support nearby. So only one stock that may be tradable using intraday fine-tune chart today that I identified starting with red candle high is AMRC. That is the technique you may use, and I discussed them because I saw similar signals in Amazon and SPY today, and I remembered the gentleman John. He mentioned that if there are many red candle high at the top on the same day, it may be a signal to be cautious. So I looked at some of the stocks displaying red candle high. No Q trade setup, but these are alerts that may use to trade using intraday fine-tune chart. we are at the 1 hour point. Let me end today's session. Thanks a lot for joining. I look forward to seeing you in our next session. That will be during the weekend. I will announce the exact date and time on my Twitter page, and you will get notified if you are subscribing to the YouTube channel Trading Profitably. Thanks once again. Keep safe and keep trading profitably.